Hello, and welcome to the Freddie Mac Connect Evolution of Mortgage Servicing and What's Next session. Audience members are in listen-only mode. The session is being recorded and will be available following the conference. To submit a question, please use the Q&A box at the bottom of your screen. If you experience any technical issues, you can use the Q&A box and someone will assist you. Lastly, you will find icons at the bottom of your screen with links to the speaker bios and the presentation deck. With that, I turn it over to our panel moderator, Senior Vice President, Single Family Operations, Dave Lucchino. Dave, I'll turn it over to you.
Thank you, and welcome everyone. Look forward to our discussion today. I'd like to start by saying that I've enjoyed a unique opportunity over the past several years to sponsor a transformative program within Freddie Mac's single family business that we've called Reimagine Servicing. I'm proud of what we've accomplished as we've worked together with stakeholders across the servicing industry to develop policy, process, and platform solutions to manage risk, transform the experience of our clients and borrowers, and promote sustainable home ownership. Thank you so much for your partnership along the way as we've invested together in our future. Maybe you could tell that I'm excited a bit to moderate this panel today. We'll talk about the evolution of mortgage servicing, where we've been, what we've learned, where we are, and where we're going. Across the industry, we've seen our ecosystem changing through automation, emerging technology, and the drive to leverage real-time data and decisions across the mortgage lifecycle. We've also seen our business impacted by the pandemic, by disasters, and by shifting regulatory priorities. We'll talk about those impacts and how we've adapted, worked together, and brought about meaningful change. But most importantly, we'll discuss how we continue to look ahead and work together to build a better future for you, for us, and most importantly, for all of the homeowners that we support. With that, let's turn to our panelists and get to know them. I'll ask each of you to introduce yourself, your company, and your role. Cecilia, let's start with you.
Thanks, Dave. Hi, everyone. I'm Cecilia Rain, and I lead servicing strategy and integration at Freddie Mac, and I also have the privilege of leading the Reimagine Servicing program.
Hey, Bill McGuire, would you go next?
Sure. Thanks, Dave. Very excited to be here today. So I'm Bill McGuire. I'm the Vice President of Servicing Portfolio Management at Freddie Mac. Our team does a number of things. You may know us through our relationship management team, our policy team, our QA team, and capital markets team. Again, very excited to be here today. Dave?
Next, Jane.
Hi, everyone. I'm Jane Mason. I'm the CEO of Clarifier. We are a process automation application that's been in our industry since 2007. I'm honored to be here and honored to share some thought leadership on technology.
Thank you, Jane. And James.
Dave, thank you. My name's James Campbell. I'm the EVP and Head of Servicing at Flagstar Bank. I'm very excited about our discussion here today.
Thanks, everyone. Well, if we get started, Bill, perhaps we could start with you. Please give us your perspective, if you would, on the current status of our mortgage servicing industry. What would you like to share?
Sure, Dave. Thanks. Maybe first off, I'll share a little bit about what's going on with Freddie Mac and how we've been able to, work our way through the last 3 years. We are, believe it or not, coming up on the 3-year anniversary of the start of the pandemic here in a couple months. If you look back over our portfolio, we had, a significant impact with our seriously delinquency rates peaking at 3.17% in August of 2020. And, that's been coming down every month consistently, month over month, to the point where we're very close to pre-pandemic SDQ rates. And that's great. We're starting to see some foreclosure activity kick up. As everyone knows, the moratorium prevented much activity in the foreclosure space over the last 2 years, but we are starting to see that tick up. Forbearances. I think one of the revelations coming out of the last 3 years, and as a result of the pandemic, is the impact that forbearances have and the use of forbearance to give borrowers breathing room when they are in difficulty and ultimately end up in a solution that works for them. So between now and the end of the year, we hope to see delinquency trends continue to come down, normalization of the portfolio, and almost back to pre-pandemic levels. So that's the portfolio. The other thing that's kind of front of mind for everybody is the economy, the impacts of rising rates, pending recessions. That's all things that we're thinking about very deeply. As you know, our mortgage interest rates are 2 times what they were just 6-7 months ago. And while this has a great impact on the originations, it also has an impact on servicers on the servicing side, and that it impacts borrowers in distress and our loan modification programs. We've done a lot of analysis around our current loss mitigation waterfall, and to the extent that rise in interest rates has an impact, overall in the portfolio, it's minimal. And we're asking our servicers to, send non-delegated modification requests to Freddie Mac for processing. The eligibility of our borrowers to our waterfall and to our flex mod remains very strong, even at the highest higher interest rates. And then for now, I think the third point I'll just want to touch on is that we continue to look at and analyze and feel the impacts of Hurricane Ian and Fiona, and specifically for the states of Florida and in Puerto Rico. We have our disaster policies in play. We know that servicers are taking use of those and extending help to borrowers who need help. And we'll continue to watch and monitor those hurricanes going forward. Dave?
Bill, thank you very much for that. Now, James, if we turn to you, as a mortgage servicer, what's your view relative to how the economy has impacted your organization and your borrowers?
Thank you, Dave. Let me first start with what we're seeing at the national level. With the low national unemployment levels, we're seeing that the delinquency levels are continuing to stay very low. As unemployment levels start to move up off their historical lows, we're starting to see delinquency levels move up very slightly in early stages of delinquency. That said, seriously delinquent loans continue to see decreases, albeit at a slower pace than we've seen in previous months. What we're also seeing is that with the rising interest rates, customers that have the ability to resume making their historic PITI payments can do so after they go through a deferral. But those customers that need payment relief are starting to see some challenges as we look at other solutions like modifications. The challenge being there is the interest rate environment that a lot of those customers receive their mortgages at was in the high 2s and low 3% range. And as we look to modification solutions like the streamlined modification, taking that customer up to the PMMS rate is challenging, even with a 40-year extension, putting them in a situation where they can receive that 20% principal and interest reduction. The other challenge that we're seeing with the consumers is that the increase in costs for a lot of the staples that consumers need each and every day, such as fuel, utilities, and other basic living expenses, have continued to go up in this higher inflation environment. And the fact that we're starting to see customers experience some significant strain on that side is putting some pressure on the one item that we've seen them be resilient on to date, which has been their mortgage payment. So we're a little bit concerned about what the inflationary environment is going to do as we look forward with mortgage payments. Back to you, Dave.
James, thank you. Jane, how would you like to jump in and add to this?
Well, I think the segue is change is a constant, right? In our industry, we have to be prepared for what we've never experienced before, whether it was the pandemic or the intersection of the rising interest rates, the impending recession, and just the overall inflationary times that we are having. I do want to say, though, I think our industry has used the fact that change is a constant to motivate and to mature their approach to adopting technologies. So what are the technologies doing? They're automating the complexities. And so back to Bill's comment about the waterfall and keeping nimble, what I've seen Freddie do is actually take that and automate it. So if you look at phase 2 of the Freddie Mac Resolve connection and integration, they're actually automating the opportunity for non-delegateds to come through and get modified workout options almost in real time. So the use of technology to help everybody in our industry through these constantly changing times, I think is the imperative for all of us to pay attention to. Thank you, Dave.
Hey, Jane, thanks. And Cecilia, I know that you and Jane work very closely together. You partner to support mortgage servicers. Cecilia, if I could start with you, segueing from what Jane said about change, how have the past few years of rapid change impacted, our pursuit of innovation?
Well, it's actually, Dave, as you know, as an important sponsor of Reimagine Servicing, it drives everything that we're doing. And we can't do it without partners like Jane and James. And really the idea is to support the needs for the portfolio and also the homeowners. And so Reimagine Servicing isn't just our platform for innovation. It's actually an approach. How do we create a better experience for the servicers and ultimately the homeowners who are in need? We have a desire to enhance the ecosystem in servicing and be nimble to move with these changing needs, the economic cycles, regulatory changes, and all the things that you heard Bill talk about. How can we roll things out as quickly as possible, have speed to market? We need to have the right tools and platforms that allow for that. And we need to stay focused on that. We need to build programs and policies, have access to data and technology that support this changing market. So there was actually thought and planning that went into all of this on how we were going to pursue innovation. We listened to our partners, like James, who said, look, we need you to work with our partners. We need you to bring change management in a way that's consumable, but also nimble. And as Jane said, we're going to continue to evolve all of our tools, including our default platform Resolve, and advance that sustainable home ownership. So we're pursuing innovation. We're going to continue that. And we can't do it without partners like James and Jane. So I think Jane's going to share a little bit more as well on the pursuit of innovation and the fact that we're learning from her and her team also.
Cecilia, now you're taking my job. I was going to segue this back to Jane.
Thank you both.
I'm sorry.
From an innovation perspective, that's where we live and breathe, right? How are we going to keep a fresh approach to what we all do? New ways of doing business is what we're talking about. We've all matured. We've embraced technology at a level that we've never seen before. But how do we keep growing in that way? Well, we have to keep growing through the collaboration and the furthering use of APIs and integration for all of our partners, whether they're Freddie Mac or there are title providers, or, we have to go back to the word ecosystem. How do we bring them all into a platform? How do you work in a workflow automation way, not have to leave that application and automatically get results from Freddie Mac, from your other service providers? That seamless integration is the critical, most important thing to keep us moving forward, along with the fact we have to pay attention to our customers. During the pandemic, we had to do things in bulk. we also had to provide self-service because of the volume and velocity of requests and demands for help that the servicers were trying to absorb. We had to come up with a way to serve self-service so that they could go on their cell phone and get an automated deferral or get an automated forbearance, and at a click of a button. And I think we worked with each other and eliminated a lot of the back and forth, and again, automated the complexities associated with helping the borrowers in crisis. So as we go forward, fresh new ways of doing business and that agility that James was talking about, the demand to move faster, to accelerate our efficiency curve, and to make sure we're bringing all of our partners in so that we remain relevant and we have the critical data and actions automated to the best of our ability. So Dave, that was high level kind of what is on our mind and how we can help each other stay fresh and stay motivated to make a difference.
That was great, Jane and Cecilia. Thanks very much. So if I bring up a new question now, maybe I come back to you, James. What are some of the hot topics that you're monitoring right now that will influence the way that you do business? Perhaps it's a challenge that keeps you awake at night, or it's an opportunity that gets you excited to wake up in the morning and keeps your team motivated.
Thank you, Dave. I'm going to follow up on Jane's comment. She hit the nail right on the head when she was talking about needing to provide self-service solutions for the customer. If the pandemic taught us anything, it taught us the importance of having self-service solutions so that we could meet the customer where they wanted to be met. That's really the key to the innovation that we need to be providing at the service level for our customers. We need quicker, faster solutions for the customer. They want to be able to access things online in their time and their space when it's convenient for them to do so. So some of the things that they're looking for with solutions is accessibility. They want their online or mobile solution to be highly accessible. And they also want the online or mobile solution to anticipate what they're looking to do when they go online. So say the customer has a payment coming due. When they go onto that mobile application or onto the website, they want to be able to access that payment solution immediately. Or if they just recently had an escrow analysis, they're going to want to see that front and center rather than having to go fishing for that. So what else did the pandemic teach us on self-service solutions? One, it identified for us that we needed accessible, easy solutions so the customer wouldn't have to sit on the phone line for long periods of time to receive forbearance assistance. Two, it identified for us that while staffing resources were becoming much more difficult to source, we could transition a lot of those simpler tasks to automated tasks, allowing us to create a higher level of experience for our employees, giving them a more fulfilling job. And then finally, we needed to provide quick answers and quick solutions for the consumer. And by providing an enhanced level of self-service, they were able to do that on their time and in their space. So one other thing that I'd like to follow up on too is go back to the importance of technology and technology innovations. Cecilia had mentioned that she had partnered with servicers to create APIs. Flagstar was one of those servicers that was an early adopter that was able to integrate with Freddie Mac and the Resolve platform so that we could be in a position to interface our underwriting platform with Freddie Mac. It allowed us to reduce the amount of time involved in the whole loss mitigation process, and it reduced our risk because we didn't have to go through and rekey with all of the loss mit solutions that we were entering. So technology's played an enormous importance in the evolution of servicing here at Flagstar throughout the pandemic. And now we've identified where we really need to focus our attention going forward and enhance the self-service experience for the consumer. Thanks, Dave.
Fantastic. Thank you, James. And Jane, as the leader at Clarifier, what's top of mind for you right now?
Our approach has been providing accessibility, like James was saying, not only to the customers, but to varying sizes of servicer organizations. So if you talk about automating complexities and making things simpler and easier, I think there's a whole population of smaller servicers that really depend on all of us to make it easier, to enable them to do their jobs better and to mitigate their risks. So if we take a look at the different sizes and components of servicers in our industry, I think it's important for us to make sure that everybody has accessibility. And I believe it's at the heart of the Reimagine Freddie Mac Resolve program, because of the need for everyone to be included in the automation and what the automation efficiencies can bring to everyone. So I'm hoping that we can motivate each other, like I said, to just keep moving and to be more inclusive, like bring the counselors in, bring our attorneys in an easier, more kinder fashion instead of making them stand on the outside of our application. So bringing everybody in and having them share information and data, I think, is critical to the future for all of us, so we can accelerate that efficiency curve and keep moving. And I think 6 months from now, hopefully we'll be reaping those benefits in a big way. So thank you, Dave.
Thanks, Jane. And boy, a lot of that answer, you sounded like one of my best friends here, Cecilia, who always uses the phrase, we will leave no servicer behind. So with that, Cecilia, I hope I didn't just steal your line, but what might you add in terms of where you're focused right now?
Well, I actually just add on to what James and Jane are talking about when it comes to Reimagine Servicing, not just Resolve, but all of the tools in the Reimagine program. The idea is to improve our servicers' experience in doing business with us, whether it's an expense reimbursement or standard investor reporting, but most importantly, our default platform and Resolve. And we had a vision early on for flexibility with Resolve and our options, where Dave's exactly right. We said we will leave no servicer behind and therefore no homeowner behind. And so that meant we have to have options for all size servicers, whether banks, non-banks, whatever mortgage company does business with us. Can they have options of adopting APIs? Do they not have the technology team, so they leverage the UI? And they're both great experiences, and they give homeowners answers quickly. And so, and what we're really looking for, what I'm looking for, is for more servicers to have a positive adoption and integration experience, like you're hearing from James and Jane, because they've been with us early on. We've learned from them. We are not perfect. This is a long journey. We've learned a lot along the way from each other, and we continue to listen to each other and communicate. But, change is not easy. But we need to be ready. I think that we have come a very long way, and we'll be talking a little bit about what's the future. But I just can't thank partners like Flagstar and Clarifier enough for all the work that they've done to do this together with us, because we knew we couldn't do this alone. And what's top of mind for me is just continuing this journey and understanding the change exercise that has to occur to bring all of this innovation to the market. Thanks, Dave.
Thank you, Cecilia. And Bill, as you're a Freddie Mac leader looking at our portfolio and leading our relationships with our services, where are you focused right now?
Yes, thanks, Dave. Not to necessarily reiterate what the other panelists have said, right? But there's an old saying, necessity is the mother of invention. And, 2.5 years ago, we were forced into innovation, into invention as a pandemic hit. And I said it last year. I think we as a servicing industry, we don't take enough time sometimes to recognize or get the credit for the way we have operated and executed over the last 2.5 years. So I would just hope everybody at some point over the next couple of days during the Connect conference takes the time, sit back, reflect, and be proud of what we as an industry have done over the last 2.5 years. So for me, top of mind is always thinking about where do we go from here, right? We have, more than likely a recession staring us in the face. What does that mean? It means higher prices. It means pricing certain buyers out of the market. It means less buying power for the consumer, higher costs across the board on all commodities, which make it which provides for less money for borrowers to make their mortgage payment. James referenced that several times already, and so we got to think about how can we be proactive and assist the borrower of tomorrow when that time comes. Just to steal a little bit from Cecilia's tagline, from a policy perspective, we like to say, leave no homeowner behind. So we have to ensure that our solutions, our loss mitigation solutions, have the ability to help, all borrowers when they're needed. As we think about potentially elevated delinquencies in our near future, and the type of help borrowers might have, we're thinking about that every day. And I think we can learn, back through what we learned on the COVID period and take some of the lessons learned and the positives from that and apply it into the future. We think that, there's opportunities to, tweak our forbearance and our flex mod programs to make it even more borrowers eligible. We think there's a lot we could potentially do with our payment deferral and expansion of payment deferral. So we're having those conversations today, both internally and with our servicing customers, to see and to ensure that we have those solutions for those homeowners in the future. I think there's, I think from a Freddie Mac perspective, we want to make great policy, and that's great, but we also want to make sure that we have the technology that goes with that policy, and that, we're pushing that out quickly and timely. And so we're making that investment, and I think, over the course of the next 2 days in Connect, you'll have an opportunity to go to a number of sessions where you can see where our investment in our technology, our investment in our policy will allow servicers to help borrowers sooner and provide faster and more streamlined solutions to the borrower, whether that's in the resolve space, the total MI space, across the board in servicing. We're going to continue to make those investments with our servicing partners.
Bill, thank you. That's a great answer. And you kind of segue us into our next question. I'd actually like to give each of our panelists a chance to answer this. And I'll start with you, James. What do you think is critical to consider as we continue to evolve mortgage servicing into the future?
Thanks, Dave. I think Bill McGuire did a really nice job of teeing up the start of my conversation here. The customer is looking for faster, quicker solutions. And we're seeing today that more and more customers are looking to do things through a mobile application. So that evolution to self-service that I mentioned previously becomes even more and more important. That we have to evolve the way that we're interfacing with our customer, providing them an experience that meets them where they want to be met. And so that provides for the customer then a 24/7 self-service solution so that they can work on their schedule and get the work done on the mobile application or the website and address the concerns and questions that they have. So we need greater functionality there. We need to be able to provide quick, efficient solutions. And that works as a benefit not only to enhance the customer experience, but in an age where we're continuing to see a lot of pressure on margins, it helps bring down the servicer costs, because margins and margin compression continues to occur through the industry. You see higher costs through wages, and we need to be able to offset that somewhere. And part of that offset comes through leveraging technology to a greater extent. So as we work on self-service solutions, we need to provide self-service solutions that are meeting those customers exactly where they want to be met. Certain items become table stakes. We have to be able to provide an accessible solution that's easy for the customer to get to. We have to make payments and payment functionality a very simple thing for the customer to do. They want to be able to do something quickly and simply. So that means that in one or two keystrokes, they want to be able to make that payment rather than having to go through a laborious exercise of putting in their routing number, their account information, their name and address. They'll want to be in a position where they can do that quickly each and every time. So where do we need to evolve mortgage servicing? We need to evolve it to the point where we can provide the customer a heightened experience by being able to do virtually everything they want to do online or through a mobile application.
That's a great answer, James. Now, Jane, as we turn to you, what do you think it's important for us to focus on as we look forward?
Well, I think to segue from what James said about the accessibility for all of the customers to be able to access what they need in their pajamas, wherever they are, however they want to do it. I think providing that versatility is really important. I do also think that it's important for the servicers in our industry to simplify their messaging and look at their letters, look at the messages that they're sending to their customers and make sure it's in plain English and make sure that you're not only automating complexities, but automating their ability to understand and absorb what we're all talking about. So I think as we go forward, the process automation examples would be providing the accessibility, simplifying that accessibility, and simplifying the real-time results. So I know for me, I'm not patient, so I want instantaneous results. So I think that our mantra has to be complete responsiveness, however the borrowers communicate with us, however the servicers, whether they're small or large, communicate. We need to have a united front, which I think we're working towards. I also think it continues to behoove us to create APIs that are simple to connect to and to bring in the other partners like I mentioned before. APIs are going to be critical for all of us to share data and to share it easily instead of making these one-off technological integrations. We need to have a broader sense of how can we do this so that we all learn together and we make it simple for our dev teams to connect. So, and I think what we experienced with Freddie was that responsiveness. They listened to us. We simplified things. We tested it. We researched it. We got feedback from our early adopter customers, and Freddie was very responsive, rapidly using the agile methodology that we all love and hold dear to our hearts. And we've made a difference when you think about how much we've been able to accomplish during this very short period of time under real stress from the pandemic and for those of us in Florida from the disasters like Hurricane Ian. And one last thing I would add is that change is a constant. So we have to have technology providers and entities like Freddie Mac that are willing to be flexible. We have to be able to change, because what if the loan mods that we have now or the streamlined loan modifications don't work next year? What if we need to be more creative? We have to be able to move and I don't like that word pivot, but I was going to use it. We have to be able to move and make sure we're meeting the demands, whatever they are, as we experience the challenges that we all know that we're facing and that Bill so aptly outlined.
Jane, thank you so much. And before we segue to some audience questions, Bill, let me ask you first, maybe then Cecilia. On behalf of Freddie Mac, what do you want our audience to know as a takeaway from this session?
Yeah, that's a great question, Dave. Thank you. I will say two things. One is we are committed to collaborating with the servicing industry, with our servicing partners, There are so many great thought leaders in the industry today. We'd be foolish not to ensure that we're hearing directly from our servicers, directly from these thought leaders. And quite frankly, they're the eyes and ears to the homeowners for us. So continued collaboration, number one. Number two, I would say data. Freddie Mac, as we're committed to providing those solutions and helping the industry kind of move forward, we have an insatiable appetite for data and more data and more data. And today we get a fraction of the amount of data that servicers have. So I think outreach on data will be very important. The analytics behind that data. We have one of the greatest servicing analytics team in the industry, run by Sasha Rosenthal. So the continuing need for data as we innovate and we move the industry forward. They're the two things, Dave, that I think should be takeaways and Freddie Mac's commitment to the industry moving forward.
Bill, thank you so much for that. And Cecilia, how about from your perspective?
Well, I would like to say that we are not nearly done, that our journey continues, and you have the commitment from Freddie Mac's leadership that we have people that are on our teams that we charge with staying on top of all emerging technology. We need to know what is available. We need to understand what our longtime partners offer and what is emerging, that we can bring in new innovative tools to marry together with that. And so that's critical, that we understand and know and research the emerging technology and how it can be brought in and how we can invest in that. And, Bill said it around data, and it's really real-time data. We want to know what's happening. We want to know the story with our homeowners, with the servicers, with the property in real time or as near real time as possible. And so what is the emerging technology that will help us consume and do that? And also share it with our constituents and have them share data with us. And how can we build the pipes that do that in an efficient manner, as inexpensive as possible? And we're also focused on the direction of reimagined servicing. We have to, the reason that we've been successful with James and Jane and so many other partners is we have a plan, and we've been disciplined on working through that plan. Sometimes you need to change direction based on what's happening in the environment, but we will continue with that discipline and the vision, and we will continue to work together. And as Bill said, listen to our partners, the servicers and their business partners, and what are their strategic priorities, and who else do we need to bring in the fold? Jane mentioned counselors and other providers. What can we do to grow this reimagined roadmap? So the commitment is there, and we look forward to the future and even more innovation that's just going to elevate everything that we're doing.
Fantastic, Cecilia. That's exciting. Well, I'd like to thank all of our panelists for their valuable insights today and for their time. One of the themes that we heard over and over here is that while we've experienced what can be called chaotic or disruptive change over the past few years, while we've experienced a lot, there's no sign that pace of change will slow at any point soon. But our ability to navigate that challenge and come out better on the other side is greatly enhanced when we're working together and staying connected. Before we take a few questions, I want to encourage everyone listening to attend our other servicing sessions, where you'll get much more detail on some of the topics that we covered here. For example, some of the loss mitigation programs we're looking at, upcoming policies and technology solutions. And everyone will also have access to all of the presentation decks that are being covered. So with that said, as I look over here, I see that we already have a few questions in queue, and I'll remind everyone that you can use the box in the bottom of your screen to add other questions. If we don't reach them here, we will get back to you offline, and our panelists will remain online in chat after we drop from video to take a few more of your questions as well. So let's see. I've got one here. Looks like, hey, Jane, this is directed at you for your role at Clarifier. What's been your experience integrating with Resolve, and what feedback do you hear from your servicer clients?
Thank you for the opportunity to share our experiences. I think I've said it before. They listened. They've been very responsive. We had a lot of challenges early on. My message would be, don't be afraid to integrate. Don't be afraid to engage with Freddie or service providers like Clarifier, because we know how to do it and we can make it much simpler and not as daunting. So don't be afraid. And I think it's very important to understand the message that was shared today, that Freddie is committed. We know change is a constant. They believe in agility and responsiveness, and we experienced all of those things. Even though we all made mistakes as we were getting the integration up and running, we had to research and stop and step back. But I think that's all part of being very, very smart and making sure that when you use the agile approach, that you look at what you've done, decide if it's exactly right. And if it's not, keep changing it iteratively. And so we've experienced all of that, and we are continuing to be excited about the automation that is being planned for early next year and for the rest of this year. So we look forward to many more successes.
Jane, thank you so much for that. And actually, I do see one here specifically for you as well, James, at Flagstar. What are you hearing from your customers in terms of desired products and digital offerings? What type of themes?
Dave, thank you. What we're hearing from our customers around digital offerings is a focus on the need for a seamless logon experience all the way through enhanced payment functionality and the ability to source documents from our web or mobile application in a more streamlined, efficient manner. The entire spectrum of what we're offering from a self-service perspective has been raised by customers, where they want more accessibility, they want quicker accessibility, and they want it to be seamless. All these points that I've made previously are all items that we're hearing today from each of our customers. They want the ability to access the information real time without having to go through an agent or receive the statements in the mail. They're looking for quick turns on that information, and they want to be able to get it efficiently and seamlessly.
Great, James. Thank you. That makes a lot of sense. And let's see if we have time for one more question. Cecilia, here's one that I'd like to direct to you, if I could, please. What are the big ticket items on the horizon for reimagined servicing? What's next?
So the big ticket items all involve APIs. So it's so important to bring efficiency. We must be able to directly connect with each other and have the data to do it. So if you haven't already invested in APIs, we need to do that together. But the biggest thing in 2023 with Freddie Mac is the retirement of WP, Workout Prospector, and Bypass, and moving all loss mitigation onto our default platform, Resolve. And so we will be working together for those services. We have 21 servicers active today through our integration. We have many servicers using all of the tools available today for short sale, forbearance extension, FHA, VA, and others, but all functionality will move off WP and Bypass by the end of 2023. And my team will be working very closely with the servicing relationship managers, our servicing ops team, and our product delivery team to ensure readiness, because we will be retiring those legacy tools. They served their purpose and we're grateful for the tools, but they are legacy and they will be retired, and we are bringing ourselves into the future, and we're going to do more and more on Resolve as time goes on. So the big ticket item is being ready for that change and ensuring that you reach out to us, and we'll make sure that we do that together.
Cecilia, thank you for that. And that's about all the time that we have today for this session. But again, we will remain online and take more of your questions in chat if you'd like to keep interacting with us. Once again, I'd like to say thank you to all of our panelists, particularly to Jane and to James for joining us as valued partners. And I hope that everyone listening enjoys the rest of your conference. Thanks, everyone.
Thank you, Dave. If we did not get to your question, someone will follow up with you after the conference. Your opinion is important to us. Please take a few moments to take our brief survey so that we can continue to bring you timely and relevant content. You can log in at any time after the conference to play back this or any other session. Thank you and enjoy the rest of the conference.